Happy hump day, everyone, as the crypto market is deep in the red and you want to know why and how long will it last. But what if I told you out there that there's a market that's not in the red? In fact, governments are buying. Well, I'm not going to tell you just yet what governments are buying because we got to do with the viewers' comments first. Hashbin says, laughing at your Paris blockchain coverage. I'd be smiling too with the free trip to Paris. Compliments to the bag holders. Someone's getting values for those lumens at least. Yeah, seriously, you can't say anything more about that. So what are governments buying? Instead, central banks are buying gold. China's central bank has added gold to its reserves for its 17th month in a row. Why are they doing that? Well, let's get to the heat map first, and we'll talk about it. Bitcoin sitting at 67,803, ETH 3435. Look at all the red on the screen, and I love redheads. I love me some redhead action, but I do not love red crypto heat maps. Sol sitting at 165 XRP. I keep hearing that the train is leaving the station, but she keeps coming back at 60 cents. XLM melting faces at 12.7. Did you miss my coverage on Paris Blockchain Week? Uh-oh, everyone. But the reason the market's red has to do with CPI data that came in. And if you watched the live stream, you saw what happened, and you saw the plays that I'm making and how I time my plays. What's interesting about the data that came out is the data came in at 3.5% higher than what we've seen since October of 2023. When you zoom out here a little bit, you see the problem we're having. It's this. Inflation went up and we did good fighting it on the way back down, but now she's staying sideways. And staying sideways means more pressure on Jerome Powell and the Fed to pause for longer. In fact, I have the more recent data that says screw the May contract and screw the June contract. We're going to be pausing for even longer. And as always, any article you see in this video, along with all my other ones, will be linked in the description below. So the reason the markets are red is because inflation came in way higher than expected. Housing and energy costs came in way high, which means people like you and me don't have as much discretionary income to pump up the markets. It also means that the Fed and central banks across the globe are going to keep rates higher, if not raise rates, which means venture capitalists aren't going to have as much money to put into crypto. And the money they do is going to be expensive. Now, what's interesting about the data is you've got Bitcoin having around the bend, but inflation data seems to be eclipsing that. Now, if we look into our favorites like XRP and XLM, not looking so hot when you zoom out. And when you zoom in, you can see right here. That's the negative action from the report for XLM. And guess what? XRP looks exactly the same. When the report came out at 8:30, boom goes the dynamite and set homegirl under that 60-cent mark. Moving money? Yes, I understand. But inflation is affecting everyone. And right now, the markets are pricing in that rates are going to stay higher for longer. In fact, like I said, I got all the updated data. I'm looking at the July 31st contract. 54% chance that rates are going to be paused then. What about a pre-election pump in September? There you go. That's when we're thinking we might actually get a break in rates, would be the pre-election pump in September. Now, would the November 7th contract help us out? No, because it's after the elections in the United States. But the September contract could be the only chance we have this year of rates going down. Meanwhile, there's a bunch of you in the comments and a bunch of viewers out there saying, bro, we're not going to lower rates at all this year. And I'm starting to agree as CPI data comes in hot. In fact, listen to this. The index for shelter rose in March, as did the index for gasoline. Combined, these two indices contributed for over half of the monthly increase for all items. Housing and fuel stays high. Inflation reports stay high. Jerome Powell and the Fed are going to keep rates high. High is the theme. Have you not figured that out by now? Yes. Our housing price is going to stay high all summer. You bet your butt. Why? Not much supply. What about energy costs? You've got Middle East conflict right now that can put some pressure on oil supply chains along with the actual price of oil per barrel. So when it looks to crypto and when you look at why things are down, it has to do with CPI data, inflation being high, money printer go burr, devaluing of items. But what is staying hot? Well, I shared it with you. Gold tends to become more attractive in times of instability when investors pile into safe haven assets against the economic climate, geopolitical tensions, and inflation. We expect gold prices to remain volatile in the coming months as the market reacts to macro drivers, tracking geopolitical events and Fed rate policies. Gold and silver are both making a move. So why is the market down? Well, it's all about macros and how expensive stuff is. Think of debt right now. Debt is at higher levels right now than it was during the Rona time. And rates were cheap then. So now, not only do we have a lot of debt, we're paying a lot of interest, a lot of juice on that debt. Devs out there in the crypto space are like, bro, we need money. Well, venture capitalists are sitting on the sidelines because interest rates are too high. They don't want to invest in a risky asset class with high rates. They wait for the rates to come down. That's why the market is pricing in the red, because those of us in the know have been following these reports. And if you've been following this channel, you know exactly what I'm talking about. That housing and energy is staying high, putting pressure on the entire risky crypto market. Meanwhile, your safe haven assets like gold and silver, we're learning that central banks in countries like China have been buying them for over 17 months straight. That's right. These countries are buying physical assets, not digital assets, to protect their store of value. I understand the narrative out there is we all want crypto to moon, and heck, I'm a crypto news channel. It would be nothing better for me than crypto to moon because viewership would go up. But I'm not here to lie to you. I'm here to tell you what the data is telling all of us. Safe haven assets are the plan. As long as inflation is high, Middle East tension is up, geopolitical tension is up, things are going to be nasty for a while. And that's why the crypto market is down, because the crypto market is risky. And right now it costs too much money to play in the risky pool. I take a few days off recovery-wise, and I might take an extra one off too. Electrolytes, thank you very much. What are you doing for the rest of the day on this hump day? Let me know in the comments below, and I'll catch you cool cats, guys and gals, later.